Steve, Andy, how's it going?
Hello, thank you. Going good. Hello, Andy.
Hello, Steve. Hello, Scott. Hi, everybody.
Yeah, I see some familiar names in there. Hello, guys. Wow. Hello, thank you. Joshua, is Brokerage Plus available to non-U.S. citizens? Sure, you're just trading U.S. markets, and but you would talk to interactive brokers. That's going to be your one deciding factor if they can open an account for you. But everybody else, thanks for chiming in. Hello, hello. Let's onward
Speaking
here.
of that, Steve, I just had to
Yes.
chime in here because we are going to have a trial version available, and I would
I
just
saw
log
that.
in today. It's really cool and great. So for those of you who want to try the Brokerage Plus along with IB in the future, you'll be able to do that.
We don't have that link ready just yet, but it's coming.
Nope, it's coming.
Yep, it's coming. All right, good teaser. Trade of the week disclaimer. Just a reminder, anything I'm going to be talking about here is, pretty much my opinion and maybe Andy's, but nothing that you see or hear should be construed as investment advice. We're software as a subscription company. We're not registered investors. We're not brokers. Registered advisors. We're not brokers. You got to seek those guys out. All right. New slide. Kind of like what Andy was just talking about. If you want more information on what you've been hearing about with Brokerage Plus, you can see the link at the bottom there, /Brokerage Plus. It's coming out of beta. Excuse me. It's coming out of beta, and the ability to trade Holly in an automatic fashion will be coming very early in 2019. So stay tuned for more of that announcement. The old you're not alone with trade ideas. We really do pride ourselves on the amount of concierge service and availability we make to you guys, starting with Barry's room here, the desktop sharing of the live trading room of Barry, demonstrating his own account and showing trade ideas to new and existing users. Sorry, I got a tickle in my throat. And he's live from bell to bell, Monday through Friday, and it's a free subscription. There's nothing to pay. A few hundred people in that room and some really good traders as well. So no reason not to take a look if you haven't heard about it. It's giving a lot of paid subscription rooms out there a pretty good run for the money. So there's that. There's the afternoon webinars that we have here now, typically Monday through Thursday at the 5 o'clock Eastern hour. Every day is a little bit different in content, but for the most part, we'll be here. And then the Friday support sessions at the bottom of that screen, you can see it's a 3-hour window on Fridays, 11 to 2 Eastern. That's where you can come in and get a lot more custom help, kind of get in line and say, hey, can you show me how I might scan for this, or how can I accomplish that? And we'll go over whatever you guys want to talk about on the Friday support sessions. And then at the very bottom, leading into the next slide, is the TI University. It's a repeating course every week, Monday through Thursday. Those are the different classes. We also have a pre-recorded version of all 4 classes, so if you're interested, you can ask for that. And the content starts off beginning and finishes up on advanced with Jamie on Thursday, going over a lot of back testing and how to optimize back testing. So it's a great recurring class. It happens every day, Monday through Thursday. Starts over each Monday. So here we are again, man and machine combined, the theme of the webinar, trade of the week. Constantly trying to remind people the machine still needs a human being to really direct it. As we go forward in our world over the next 5 to 10 years, the majority of responsibilities and jobs of the human are going to be to kind of keep an eye on what the AIs are doing. The AI and then technology is not an end-all be-all solution. I've talked many times about the oncology example of Watson, the AI from IBM, learning how to read journals and then giving the researchers really good time-saving tips and really good ideas for the different DNAs that they're looking at. So there's a great example of how the machine is delivering to the doctor and the researcher, the human, a curated list of good ideas. And that's really what we try to focus on here. I do want to back up for a second and just remind people the Brokerage Plus is not a substitute for market knowledge. It's not something that you can just plug into and have it work for you. You're going to be not so pleasantly surprised, I think. So just have proper expectations. Learn to walk before you can run. The Brokerage Plus tool is definitely a running type of tool. So we'll get started here today, kind of as usual. I'll do some market recap. Got some things that I'm noticing, we'll talk about. Andy's got some ideas, some things that caught his eye in the Holly recap today. The trade of the week this week has not triggered. We'll talk about the idea behind it and why it could trigger and what the thought was. Check into last week's trade of the week as well. And it's been a while since I've brought this up, but there's a lot of people that come in and they want to know, how can I catch this particular stock that happened today? And I basically say, well, are you familiar with the stocks like this? And the point is, a lot of people are not familiar with the stocks like this tool. So I'm going to go over that for those that are not aware of it. And then, time permitting, at the end, some chart requests. We'll see if we can discern anything that you guys want to look at. We can take a couple of chart requests. All right, so let's minimize that and go into the market recap. So I've got my little drawing tool, which is cool. I mentioned yesterday again in Jamie's class, this is the moment of truth that we lost our bull market, I believe, in hindsight. And since then, it's just been kind of a little series of possible lower highs. Don't know what's going to happen here. But what I do see is the last 1, 2, 4, 5, 6, 7, 8, 9, 10 days in the S&P have been trapped under this 10-period moving average, which when we get into volatility and momentum, I really try to pay attention to that 10-period because look at what it told us back here. And then we got choppy again. And what I was showing again yesterday of note was a dip in the volume. And that dip in the volume corresponded with that little low volume bounce that we had. Which, as it turns out, of course, again, in hindsight, this is what we're talking about in the ebook, turning in from a buy the dip market to a sell the rip market. And when you have a feeble attempted bounce like that with not a lot of volume, not really surprised in hindsight to see that was sold. So the onus is on the bulls here to try and recapture these declining highs, lower highs. Is this going to turn into a lower high right here? We don't really know, but let's see, what was I going to say? Oh, gap fill is also of interest right here. And we're running right smack into the declining moving average. So there's a lot of headwinds coming in to greet these two green candles that we had in this bounce off this overnight futures gap that we had on Monday. So a lot of work still to be done. The only way I think we can say that this is going to resolve itself is to break out and then start to consolidate before it wants to move higher. I mean, that's always a possibility. We could look at this in hindsight as kind of a double bottom. But for now, we don't have that information. All we have is a lot of headwinds coming into our face right here in the S&P. So hopefully in the next couple of days, maybe we'll get some resolution over there. Looking at the NASDAQ, same technical indicators are coming into play here. Once again, we had a bounce right up into the declining 10-period moving average. That's what's catching my eye. And again, just want to know, is this going to be another case of lower highs coming into play? I don't know. We'll see. Same thing occurred in NASDAQ, a big dip in volume back here, which corresponded to that low volume push higher. Don't forget, in correction type markets, we can have very severe bounces. Some of the bigger rallies can usually occur in down markets for sure. So keep that in mind. Let me clear this and we'll look at the other two real quick. Also of note before I leave, this is not something that the big money managers and institutions are going to want to see. This is what they call the death cross. The 50-period moving average crossing down below the 200 can be a longer term technical signal to throw up caution. And trust me, there's a lot of big money managers that will pay attention to that. And as we move over to the IWM, we have already had that pass. This is that happening right here. This is the 50 crossing down below the 200. So the NASDAQ is on pace for something ugly like that. Who knows? It's going to need a stick save probably to not experience that.
And
But
Steve,
Mhm.
looking at that IWM, it just came to my attention there. It's forming a nice size up and down cup and handle. If you see that pattern reversed
Upside
and
down cup and
forming
handle?
that, yeah, it's upside
What
down.
Andy is
Raised
seeing?
cup.
Is that what
Yep.
you're saying?
Yep, exactly.
That's kind of what I called the soccer ball bounce. When something drops like that, bounce, bounce,
Yep.
bounce, and then eventually it kind of has to resolve itself. That's what I'm seeing. That's what I'm predicting. I'm just one guy with a pair of eyes and 10,000 hours, but I could go back to the spiders and say the same thing. Where are we going to go from here? Well, a gun to my head, I think we're going to test these lows again down here. I really do. I've seen price action too much not to believe that this isn't going to be one of those. I hope I'm wrong, just because it's more fun when the market's going up and people's 401ks are working for them. Lastly, before I get to the FANG, is the Dow here is well below its 10 period. It's not even close to coming up into it, although we do have a little bit of a gap here that could happen. But all four of these averages I've just looked at are all kind of experiencing the same thing. They've had a little bit of a relief bounce. There was no follow through from the oversold conditions going into the weekend. I'll talk more about that in the trade of the week. But oversold bounce 2 or 3 days. Okay, now what? It's back to show me time for the S&P. You've got a lot of work to do to get back through these averages. That gap is to be filled, is I guess to be expected, some could say. Now, what I mentioned yesterday also in Jamie's webinar is that we're not in bear market territory when it comes to the indexes. We're in correction market. A correction is a 10% off of the highs, and we have experienced that and are experiencing that. What a bear market is a 20% move. And in that particular case, we have that over in the FANGs. I mentioned this last week, and there's nothing that really has been resolved. Just another little weak bounce. Look at it down here, running right into the pocket, right into the trap. Not only that, it's an absolute pivot line as well on Facebook. Not looking good. Facebook's down about 40% from these areas back here. Hideous. Apple, which has been a real market conducive vehicle, is extremely oversold down here. And honestly, guys, I would have expected yesterday a little bit more of a bounce off of that bottoming wick, which we did not get. So score one for the bears there as well. They couldn't even take out yesterday's highs. So Apple looks horrible in the FANG category. And then Amazon is also part of FANG. This is also down about 20%. And then, of course, Netflix, not much of a bounce today. And Google doing what I think tomorrow could hold as price action wicks through, breaks through some moving averages, and then pulls back and puts in kind of a blow off top. Google doesn't look strong for tomorrow, in my opinion. So as far as the leadership stocks, the FANG stocks that led us on the way up, we need to pay attention to those on the way down, and they are in bear market territory. The indices, whatever you want to call them, they're still in correction territory. But if we get this bouncing ball to resolve like we kind of think it's going to resolve, all bets could be off again. It's not really good. Look at how yesterday the IWM got caught up into the net. Boom, right into the net, reversed off highs. Didn't have any part of it today, closing back below that low. It's under pressure again today. Under pressure. Got a queen in my head. So that's what I got. Anything else you want to add?
No, man, you covered it really good. I'm gonna, and I agree with you on all accounts. I think it's different this time around, but time will tell.
Wally pointed that out. He saw the death cross has already happened in Google as well. I wonder if that's the case in the others. I didn't really pay attention to that. I'm sure it is. Well, a long time ago back there in Facebook.
Now,
Apple's right there. Look at that.
Yep.
What were you going to say?
I was going to say a lot of people may be asking themselves, well, if the stocks that led us up are now in bear market territory, why isn't the major indices in? That's because a lot of your other stocks that make up the indices were already in bear market territory. In other words, they didn't run up like Apple and Google and Amazon and all these did. They in other words, they have these ones that ran up have a lot further to fall. And so even though the rest of them, may have been pulled back maybe 10% now, they did not have the run up Apple did. So maybe they're hanging on, hanging on by a thread. I don't know, but it does seem odd that all these major FANG stocks will be in bear market territory, but the market is not yet, and that's because a vast majority of these things have been are in their lower 25% of the year anyway. So
right, they just didn't have as much to fall.
No. Exactly.
That's why we talked about in the last couple of weeks about trying to look for trade of the weeks, which we'll get to, that we're basing, because if the market did fall back over, we didn't want a tree branch, so to speak, breaking and falling to the ground. We'd rather find something that had a bigger base. So, all right, we'll move on. And Don, I see your request for raw stores. Hang on to that. We'll get to that towards the end. But other than that, if you want to take the screen.
Yep, I'm going to take it. Let you go get a drink of water. Or
I need one.
You do. All right. All right. Here, let's take a look at Holly today. First of all, let's take a look at the market and see what, for the most part, she had to work with. And of course, the major averages had a gap down today and pretty much crossed the board. And really some sloppy action today, really sloppy until maybe the final, hour or two. Just a lot of back and forth. I noticed this wick to the upside and wick to the downside when tariff talk started coming out again. I thought that was funny, and then we got some legs and closed on highs, up marginally today, not even a quarter or just above a 0.25% in the spiders. So there's not a whole lot going on today, but I thought Holly, for the most part, did really well, especially Holly Grail, and I'm going to go over and we're going to take a look at some of theirs. But real quick, I'm not going to go through all three of these. Holly Neo finished good on risk on, but she was kind of flat on risk off. Not a whole lot to talk about there. And Holly 2.0 was not all that great today. It was pretty much just the opposite of the Holly Grail. So a mixed bag, but boy, if you're trading Holly Grail, which is our original Holly, I thought there were some really good trades in that. So we'll go over a few of these real quick. Take a look at the final numbers here. Real quickly, I will pull up the others. Let me just pull them up over here so you can kind of see where they finished today. And Holly 2.0 finished 347 down on risk off, and risk on, if you held these, it's just the opposite of the Holly Grail. So now remember, guys, this is based upon my $200 per trade loss. So in other words, you'll see here, you'll never see anything go over the 200 mark because that's my maximum loss on these. Now I'm getting a tickle in my throat. Must be contagious. And real quick on Neo finished pretty good on risk on, but risk off was pretty down just slightly today. Real quickly, down $200 based upon my risk parameters. So let's call it like it is. It's a mixed bag. But if you happen to be so lucky as to focusing on Holly Grail, there were some really good trades today, and we'll go over a few of them. And this is what I always like to see, guys. You had nice risk off, very nice, almost 800 on risk off, and risk on over 1,000 there. And that's the kind of stuff you really love to see because you can't lose, obviously, whichever direction you're playing. And look how clean this is. You had a couple of reduced risk and timed exit. So no stops in this one. It was just a really good day today for the for Holly Grail, I thought. Limited number of trades across the board. You had 15 and 2.0, but for the most part, just not a whole lot happening. And that's what I like to see on a day where it's kind of choppy and not a whole lot happening in the market. Let's see, a couple that I liked. Let's go to this top one here. I thought this was a very good call. And if you're watching this, yes, Waleed, I have risk set at 200. And let me show you, I've been doing this every month. Go ahead and do it again this week. If you go to tools and you go to options and you go to AI trade size, you have 3 different choices to choose from when it comes to your risk and how much you want to allocate per trade. You can do it by dollars, you can do it by shares, or what I like is the risk based on stop loss. And what that means is you will never get stopped out before the stop unless it's reduced risk and you're following, when AI comes to automation and you're following the risk off parameters, you'll be also get out at reduced risk. But if a stock does happen to go all the way to the stop price, the maximum I can lose is $200, and that's what I am inputting in here to make sure that happens. Now, real quickly, let's change this to 100 and see what say the most you want to lose is 100. We'll click save here, and look at all these numbers change. Now Holy Grail was up over 1,000. Now it's 500, 300, and of course your losses will be smaller in the other one. So where you lost when this was over 1,100, now it's at 5.7. So basically, you just cut it in half. So you got another trail. That's Steve's drawing tool. No, that's not featured in TI Pro. That's actually a free. It's called Epic. Epic.
Yeah, Epic Pen.
Yeah. Mm-hmm. All right, so let's go back in here and take a look now that I've changed these values where the most I could lose is $100. You see it there on risk on, it stopped there. All right, so let's take a look at run today. This is one, actually this is one I created a long time ago for a swing strategy. It doesn't come up that frequently, but today it came up, one spit out, and this was, and I've been waiting for run to run, and today it ran. And this is what we're looking at today. Nice little breakout to a 2-month high almost. This 2-month high right here. If I go to markup and do a horizontal line, you're going to see it triggered just below that. Right on this bounce is where it triggered. You can see the price at 13.59. And once again, love these because we call them no pain trades. In other words, they trigger, you get in, and you never experience any pain as far as a stock going against you. Now, I know a lot of traders who experience pain when the stock's going in their favor, and that's something you have to, reprogram the mind, to enjoy and let these things run for you. But it's amazing how people can just be the opposite. They'll relax when one's going against them, but if it goes in their favor and they're afraid they're going to lose money, so they feel pain from that and get out. But anyway, I thought that was a really nice one. And all day, just held that. Look at that 10 period, Steve. That Steve always likes to point out, and just hugging that 10 period, bouncing off of it, and held it pretty much the whole day. Nice trade one there. SE. Strong stock pulling back. Look at there, pulled back, doing, and no pain pretty much there too. Now, somebody may argue, well, you know what? I couldn't get this because it bounced really quick. Well, I'm going to show you the next one I show you is going to be one where you can't argue this point anymore, because I see this more and more on these contrarian plays in EQR. Look at the alert right here, and then look how much it drove, almost all the way down to the stop. So there is where you could have gotten a much better price than Holly, where it triggered, went way below, and then bounced back up, and was one, as actually I think was the best performer it was on risk on today. So you can see if I sorted by risk on, that would be at the top. So nice trade there. I mean, honestly, if you grabbed it on the way down, yeah, you experienced some pain, but more than likely, since we're not auto trading now, if this triggered went off, you could have got a much better price than Holly on this one. All right. Dr. Dre, let's see. Did I go over SE here? Did I do that one? Yeah, that's the one I just looked at. How about CHD? I'm trying to figure out where this one. Okay, yeah, this one is one that, yeah, you would have to, if you got out for 23. Oh, I guess it was right here. She took it on this one. Yeah, so this is kind of messy. I'm not one to tell you that, hey, you should watch this, stay in it until you got this. I understand some of these things when they go back and forth like this. No one's going to say, you should have just bought that, held it all the way to the close. Let's be realistic here. When they go this far below the stop, come back up, vacillate around the price again, yeah, that's not one I'm going to argue that you could have traded that one very well. But nonetheless, still $23 on risk off. I don't have a whole lot more to say, Steve. It's a great day for Holy Grail. I thought just a limited number of trades. Look at the risk off. On risk off, only a very what is that, like $25-$30 there on risk off, and look at all the money you made on risk on. So, but at the same time, Holly 2.0, boy, just the opposite. Didn't perform that well.
All right, well, I have something I can add, so go ahead and send it over. I took a screenshot today. Sometimes on Tuesdays, I try to take screenshots when things line up in interest. There it is. All right, so this was a screenshot. I don't know if I have the timestamp in there. Looks like it was about 8 o'clock my time, 11 o'clock East Coast time. Does anybody notice anything interesting from this screenshot? I'm kind of highlighting it pretty closely, but
a lot of longs, huh?
A lot of longs. So when I talk about directional bias, I'll notice these are open positions too. And it was like this for about an hour. I did not get rid of my tickling throat. Wow. So this is what directional bias looks, guys. I've talked about it. So in all three segments, the open positions, nothing but longs here. Nothing but longs here. One short and two longs. Definite directional bias in the moment. All right. Things can change after lunch. I get it. But I wanted to circle, the 15-minute chart so you could see gap down and never really look back. Nice push forward. Nice pull back to the 10-period moving average, which staged the next higher push in the morning. And there you go. So if you were, and I know these people that are out there. I actually saw one today on Twitter, and I kind of laughed to myself. I've never met him, but I said, boy, I bet he's one of those types that just wants to go short. They want to go short and be different from everybody else and make money. And it's just a weird personality trait. I've met certain people who only want to go short, and that's fine. They make money at it, more power to them. Great. But on a day like today, trade ideas, and you look down and you're looking for things to short, might be a little bit more difficult because the path of least resistance is being shown to you here by the AI as being long, at least in that moment anyway. All right, CLD, I'll come back to that. I've got a reason for that. So just want to check on last week's trade of the week was a long. And again, we talked, like Andy said, not trying to buy or look to buy something that's had a big break, which, let's see if we had called something like that way up here. It had a big break, but zooming back in correct form, this is about as saucer bottomish as you can get down here. So this was a much safer buy. And look at what it's done. I mean, since we've called it, it pulled back. This was the trigger day right here. Remember, it was a pullback trade. 1, 2, 3, 4. Don't be the guy that buys that fifth candle. Wait for that nice blow-off candle, and then look for an area where it might come back and settle. We got a nice entry on the pullback, and it's chopping back and forth. Just the opposite of what our markets are doing, guys. It's now resting above the rising 10-period moving average. And I really feel like, if this continues and the market doesn't fall out of bed, this one has a shot to explode higher. So it's in the money. Nice pullback entry. It's a good example of how you don't always have to chase things in the market. Wait for your pitch, put the bat on your shoulder, and it'll come to you sometimes. So fast forward to this week. Let me see if I can nail this. Not really. It's kind of hard. Well, we don't have those two green candles on the weekend. What we had was the S&Ps. There we go. Perfect. That's what we had over the weekend. I'm going to get rid of that as well. This is what I refer to sometimes as the horseshoe pattern. When a stock gaps, tries to fill the gap, and then rolls back over and heads back towards the initial gap direction. That's what we had to work with on Friday. And going through the weekend as well, you never know. There could be some black swans out there that affect the futures market and blast things out of proportion. But there was no way that we really wanted to look for a long. I mean, there may have been a couple we could have called, but it almost felt like forcing a square peg in a round hole. So the idea and the content, the here, by all means, consider going to cash if you don't want to do anything. If you're a bit more aggressive, well, maybe we could once again play the downside. If you recall, we did call the SDSs, which is an inverse ETF. We did call those back way back here, I believe, and it was a big push forward and then a secondary push. So a lot of that move, took place after we called the SDS as well. Here we are again. We're nestling back up as the market makes lows. The SDSs want to come back near highs. You can see these three candles are just the exact inverse of what we were looking at. Well, had we opened up and started to sell off, this could have worked, but we didn't. And that's okay. No harm, no foul. There's no trade, but that doesn't mean that tomorrow or Thursday or Friday it still can't trigger. And again, it's predicated on if the price action here fails at these levels that we kind of ran into today, and if we roll back over and take out this closing, or basically the low of this day right here, that's not going to be pretty at all. And I don't think there's any reason for anybody to want considering being long at that time. So, if we just sit here and no trade, no trigger with this week, well, we didn't get in any trouble, no harm, no foul. We didn't force anything because honestly, there really wasn't much to work with. And so I was a little surprised to see the gap up. Probably in reality, the market was shrugging off news in Russia and Ukraine, Crimea, but was probably more focused on the numbers from the Black Friday sales. And so it's giving a little bit of boost to the market. But now, like I said earlier, we're in the show me mode. Where are we going to go from here? You're running right into the expected levels of resistance. Where are we going to go from here? And if we do fail and roll back over, the SDS as the trade of the week will come alive. And that's that. All right, where to next? Stocks like this. So if you guys are not aware, a lot of times you'll ask us, well, how can I catch a stock at this time of day? And you'll send a screenshot, and that's great. But for those that like to fish and maybe dig a little deeper, let me show you something that you may not be aware of. I'm going to go to our website, and I went down to the bottom footer, and I'm going to click on a product called Stocks Like This. What this is, guys, it's a reverse engineering tool. And here's how we're going to reverse engineer. I just grabbed something that I thought was interesting earlier. CLD was a trade from Holly, I believe. But I thought it was rather interesting. Again, using as Andy pointed out, I like to use that 10-period moving average. So here's a stock that sold off, bounced again, and then went sideways. I love the sideways action. And if it was going to reverse, this would be the place it would do it. As soon as the price hit that 10-period moving average, which was coming up to meet it, it popped higher. So if I isolate this candle, it's 10:30 West Coast, that's 1:30 Eastern. And I'm on a 15-minute candle here. So going back to our reverse engineering tool, let's type in that information. The symbol is CLD. It's today. We have to go to military time, so 13:30, 1:30 Eastern. And you can go to 5-minute or 10. I'm going to stay on 15 because that's what my eyeballs saw. And those are the parameters that we can input to reverse engineer this thing and see what was triggering in our database relative to that stock at that time of day. So we submit. And mind you, again, you should be logged in on this page. This is a Trade Ideas page where it says up top if you're logged in or not, because it'll come into play as we maybe try and formulate something here. So what we get up top is the first box is going to be all the events. These are all the events that triggered during that period. What we have down here are all the filters and what some of the filters we're reading at that time. So obviously selecting everything is not the idea. The idea is to try and maybe work backwards and see what can we learn from this period in time. Now, one of the things I've learned is that you're probably going to see 1-minute volume spike a lot. And look, the occurrence, it happened 58 times. So that's probably going to be way too many stocks coming through. I'm going to avoid that one. But what was interesting to me was this VWAP divergence right here. And I was going to focus on that, because we don't want to start checking too many of these. We want to try and just focus in on something. It only came through 8 times. We can even, if we wanted to, and I'll do this, why not? Let's go to a 5-minute and see if there's anything different. It's probably going to be the same stuff, just less frequency. Yep. Well, actually a lot less. 5 minutes might be the way to do this, quite honestly. 1-minute spikes, 10 occurrences there. We had an NR2 came out. That's interesting. We could come back to that, maybe place hold that. But positive VWAP divergence, I thought was kind of an interesting event. So we could select both of these if we wanted to. In fact, we'll do that. We're going to process. This event is a narrow range, and then this event was positive VWAP divergence. We'll see how they come out. But now we go down to this giant list of filters, and don't get Google-eyed by it. There's only a couple things that I find interesting in here. First off, what was the relative volume? The relative volume reading, there it is right there. Ooh, this thing was really kicking ass. The lowest it scored was a 10.97 relative volume, and the highest it scored was 11.03 in that 5-minute time window. So that is very significant. Let's see, these average daily volumes are not really significant to me. There was something else I was thinking about that I thought was significant. I probably should have wrote it down. In terms of the filters. What was that? Average daily. I'm going to have to clear that up when we get that to that step. I think this is what it was. Stock twits. It was interesting. It was being mentioned 5 times normal, so a little social media activity going on over there. So you can see, you can come through here and pick out things that maybe are interesting, and it's not going to be the end-all, be-all reverse engineer scan setting. It's going to be a starting point. So here's how we can get to that starting point. Again, I'm going to select just 2 alerts: the event of narrow range and positive VWAP divergence, which only happened once, which is kind of what we're looking for. Not looking for 10 occurrences of a 1-minute spike. If I use this, I'm just going to clutter up my alert. I don't think I'm going to get much value out of it. Is there anything else you can think of, Andy, that might be significant on the filter side? I think 5-minute, that's what it was. 5-minute and 10-minute. There we go. The 5-minute volume was above normal. 244 all the way up to 460, so we got to check that. Now, I ask you, was there anything that you thought I might want to look at?
Well, I'm not so sure we can find it in this, but I would love to know if the distance. Of course, that's something you can add in the filter. Of course, we have to use the 8-period moving average, but maybe we can range it around the 8 period, so it would include the 10-period.
Let's see what that said. If we can find a change from the 8-period, 15-minute.
There you go.
Okay, so it was never more than 0.06 away. We'll check that too. Mm-hmm. See, friend, that's why I'm showing you this. There's too many people that are not aware of this tool, and this is a great starting point. And Waleed didn't know. Waleed, I know you know about this tool. I thought somebody told you about this. Maybe I'm mistaken. We do have a lot of users. All right, so the idea is to not go crazy. It's to pick and choose a few items of interest, and we found a few items of interest. So where do we go from here? Well, if you scroll down to the bottom, selected. I have selected some, so we're going to copy to a config window. Selected, and then we come to this window right here. Well, even though it doesn't look like the traditional cloud window, this will actually work. And so here's our starting point, guys. Right-click, copy. Let's see what we can get. Let's go File, Load from Cloud. I'm going to have to pop it in there. Oh, no. That didn't work. It worked earlier when I tried it.
I think you have to use the collaborate.
I have to do one more. I think I have to do one more. Hold on. Okay. Let's see. No. Is it this one? Let's see. Oh shit. What do you think? Is there a collaboration on there?
Well.
Oh, I think this is it. Maybe if I go there. No. Shit. I did this earlier, guys.
I think the code. I think the code in the URL is the collaboration code, but so you may be able to just open a window and.
Oh, collaborate. I see what you're saying.
Yeah.
So go and okay. So
let's try
that collaboration code. Forget the cloud. Let's go to new alert window and launch it as is. It doesn't matter. And then collaborate. Paste. Right? Did I do that right?
I don't know.
I think so. Yeah, I did. There we go.
Hey.
Spots. All right, so let's check a history. Today, what did we get today?
I don't think we got anything, but which wouldn't make sense.
It's still loading.
We at least should get CLD.
Yeah, it's still loading. I'm really surprised because I did this earlier.
Oh, you actually did it for the cloud link?
Yeah.
Okay.
Let's try one more time. Crap. Okay.
Well, let's go into configuration and see
Yep.
that window we can get and see.
Looks like there's nothing coming through. Okay. So configure.
Because it looks like there were a lot in there. Those are right.
Mm-hmm. I'm going to turn down the relative volume. That's probably integral. That's way too high.
Yes.
Okay. I'm going to maybe turn down the 5-minute volume just a little bit, and I'm not going to put a cap on it. And stock twits average daily. There's no cap on that. So I think it looks like you need to come back and clean this out a little bit. I'm going to say no more than that distance away from. Let's see if that brings anything in here. Hey, we got something now. Save and pizza. So pizza, I was liking it earlier. Hey, look at that. Not a bad, there's something going on there. But I don't expect to see everything perfect. That's probably more like what we were expecting right there. Tight range and then popping out of it. Let's see, these are all the narrow ranges. Let's see what the VWAPs look like. Not bad. Here's another VWAP. Didn't really go anywhere, but not getting into any trouble necessarily here. So without spending too much time on it, I just, again, want to make you guys aware that this tool is available. Is there a platform problem? All windows are up. No, Bill, what was happening was I had my configurations too tight. I had to go in there and loosen up a lot of things. So you'll have to do that as well. Ideally, you just want to get a couple of ideas. You don't even have to transpose it. I mean, theoretically, you could put it on one screen and look at the filters and then just go into, configure and pick and choose the ones you want that way without having to mess around with the crazy steps that I just went through. But still, the idea being is to get at least some idea of what it is that was triggering when these things went off. And this is just a great place to start. A lot of filters, yes, but again, it's a starting point. So I'm sorry, Bill, I'm not quite sure where you're hung up on that, but you can always come into info@trade-ideas and do a screenshot, and somebody can point you in the right direction. So speaking of Bill, didn't you have a stock you wanted us to look at? Was it Ross Stores? Because we're going to segue into that portion of the webinar now. Not bad. Looks like it probably just had earnings, and it did 4 days ago. Big gap down, 1, 2, 3. So it's trying to do a little bar reversal. Here's what I see. If this thing takes out today's highs, it's very well possible you could have maybe another day or a day and a half run, because what I see is you're going to run right smack into these declining. This 10 period is going to move down faster than you realize, and this 200 is also going to act as a block. So I lost my pen. Turn that back on. I'm getting used to my pen now. Do we have a video on that, stocks like this? Did Michael create a stocks like this video?
Good question. I'll check while you're doing that.
So essentially, yeah, Bill, maybe you have a little bit of day and a half, a little bit of bounce, but it's going to get really dicey when it gets up into this area. That's what I'm seeing there. Does anybody else have, as we moved on from stocks like this to just the final segment, we just looked at Ross Stores for Bill. Does anybody else have a stock chart they want to look at and get a couple pairs of eyes on? STKL for today. STKL. Similar kind of major bar reversal. I bet the average volume or the relative volume was only 1.9. Kind of expected more. Big volume day yesterday. What was going on there? Well, that's kind of interesting, isn't it, guys? Look at the anomaly here that's happening. All these days down, but all of a sudden, that quiet day had a giant volume candle, but no real price action. The day after, that's kind of interesting. This is more of an old school almanac when Andy and I used to trade with less market making algos. you could kind of lean on those clean out prints. They call that a clean out print, right? Maybe a big seller down here, big seller. And a lot of times when you see the big block trade or a big volume spike and not too much price movement, that means a big transaction just took place, and that can sometimes signal a reversal. So in hindsight, it's easy to see that. Today, well, look at how it held that intraday 10-period moving average. Is there going to be more meat on the bone? Maybe a half a day of follow through, perhaps, but again, running right into congestion there as well. But most importantly of interest, if you guys see this again, if you see just a stock being annihilated and walked to the woodshed, and all of a sudden it ends the day with a giant volume spike and didn't really do much in price, get ready. Something might be ready to happen. All right, we'll do one more, and we'll bring Scott in. No, two more. GNRC. Oh shit, we got more, don't we? We'll do three more, and then we're done. TTD. I'm seeing kind of a range-bound trade here. It's going to have to resolve itself. It's pretty rangy, so maybe a nice consolidation and then a push higher could be a possibility for that one.
One good thing there is some relative strength. It is above all its averages, unlike many stocks in the indices. So if it does break that range, it looks similar to Run. If you pull Run up, call from Holly today and look at the daily, see how it kind of broke its range right there and had a
volume too, relative volume 3.3. Yeah. So two more. GNRC.
Not too bad.
Doesn't average a lot of volume, it looks like.
No.
But it doesn't look bad. Again, it's above all moving averages. These are kind of holding it like a bird in the hand. It's got a shot. It's going to have to take out this topping wick, though. You could get a head start, maybe buy a little bit and watch it.
A well-defined wrist down there. You can see those three bottoming tails right there. Yeah.
Yep. Sometimes people will say, I don't want to miss this trade. I think it's going to go, but I don't want to miss it. So maybe buy 1/3 and it's on the radar. If it doesn't do anything, it's a 1/3 trade. But if it does go, blast another third or another 2/3 out of it. Okay, and then the last one before we bring Scott back is going to be HD, the old Home Depot. Home Depot. Funny how stocks lead the actual data points. We're in a housing slump right now, and Home Depot has been telling us that for about 4 or 5 months already. 3 months at least. Let's go back and take a look at the history, get a bigger picture. Okay, that's interesting. So it spent very little time under this significant support level and popped right back up. Very interesting. Could be some more meat on the bone, but look what it's got, right? Today's high is hitting the declining 10 period. I wouldn't trust these charts for longer than a day or a half a day, quite honestly. These could be some interesting day trade charts, but I don't think bigger picture wise they're really that conducive. The only thing Home Depot has going for it is going to frustrate the shorts that wanted to follow through from a breakdown of this support back here in April, and they're not getting it as of today. So if there's follow through tomorrow, you can trust it, but I don't know how far I'd trust it. Maybe to that 20-period moving average before it starts to find some resistance. All right. Well, thank you guys. I'll bring my slides back up here, and Scott's got a couple of announcements. And just remember, info@trade-ideas.com, and we'll route you to the right department. So come on in, Scott.
Yeah, thanks, Steve. Okay, so a couple reminders on the way out of the webinar. There is only 1,000 licenses available for the first wave of Brokerage Plus as a standalone product, and it's going to be released in January, but we're selling these between now and the end of December 31st for that January release. So if you don't yet have access to Brokerage Plus, this is the time to do it. Just go to trade-ideas.com/brokerage plus. You can make a $100 deposit. The total cost for the lifetime license is $1,100, and you won't be charged for the remainder until we release it. So the details are on that page. Go ahead and get on that and figure out if you want to add AI auto trading to your subscription for 2019. We have videos out for that the summit that we put on in October. It was on October 20th. Lots of fantastic content. If you have not watched the speakers or the panels yet, it's free for you. Just go to trade-ideas.com/summit video 2018, and then get taken to a page you can bookmark and watch everything at your leisure. So enjoy that. We have a podcast. We should have a new episode up this Friday. We tend to release every Friday. Just search for Trade Ideas Podcast in your podcatcher that you use and add us as a subscription. Then you are ready to get the new episode. You can also cruise through some of the archives and find the guest spots that we have. We've got some great ones in there too. We have an ebook that's been very timely this year. Both Steve and Andy contributed chapters. It's for five strategies that help you win in a post-BTFD market, which we have absolutely been in since February. So if you don't have the book yet, go ahead and get it. Again, free. Just go to trade-ideas.com/ebook and get it delivered to your email. We have a discount code available both for upgrades and for any new subscriptions. Use SAVEINNOV, all caps, and that'll take 15% off your first month or year of Trade Ideas or your first month or year of the upgrade. That's going to be good until that's going to be good a little past the end of the month, because it'll be good until next Tuesday. So it'll be good until midnight on the 3rd of December. But make up your mind before then, because then it expires. Any questions? Shoot an email to info@trade-ideas.com. That goes into our help desk software. So that's the best place to send your questions. If you want to follow Steve on Twitter, he's @TodayTrader. We also have @TradeIdeas, Facebook.com/TradeIdeasPros, where our Facebook page is located, that you can like it, and then you'll see our updates, and you can share those with your friends. It's all good. All right, we've got a recording that'll be up later on tonight or tomorrow morning. Send you an email when that's ready, and I guess that's it for today. Thanks, Steve and Andy, and everyone that attended.
All right, see you next time.
All right, guys. I'll see you Thursday.
Bye, y'all.
Bye-bye.